action. Welcome, ladies and gentlemen, to fifth. Is this the fifth? Our fifth Business of Dentistry seminar, and we're going to do a little bit more about showing us where your money goes. So we have some great speakers that come all the way from Utah. Elevate Practice. Some great CPAs are going to talk to us about how to read your profit and loss statement and drill down so you can actually see where your money's going and how maybe where you can make some changes. And then the second half of tonight's presentation is by Westpac. I always get your name wrong. Westpac. Travis Scribner is here. And of course, Travis was the sponsor of our Shred Day that we just had last Friday. So great event. Our members really enjoy that, Travis. So thanks so much for supporting the SNDS. So without further ado, I'm going to turn it over to Chris. And he's going to start us off about looking at your numbers. So Chris, welcome. Thank you so much for being here.
Thank you. Appreciate it.
All right. Thanks for coming. So I know, have you guys been doing dentistry all day? I have. Yeah? No? Okay. I was just thinking, you've been doing dentistry all day, eating pizza, and now we want to talk profit and loss statements. I tell my kids, I tell my students, because I teach part-time at a university, that I read my kids books to put them to bed, right? So like I want this to be as entertaining as we can make it for profit and loss, which for us, this is great. This is what we love and what we do every day. But I also want to make sure that it's very relevant for you guys. So I just need to know a bit of your background so I can personalize it and tailor this to you so it's super actionable. So since there's a few of you here, tell me your name.
Cara, I'm a dentist.
Where are you at?
6 years.
Okay.
I have a unique situation. I don't do like regular dentistry. I do
Irregular?
tongue ties.
Oh, really? Okay. That's your specialty. And do you go around to multiple offices doing that, or how's that work?
I have my own office.
You have your own practice that you own?
Well, no. It's complicated and changing currently.
Okay.
Currently.
Okay.
So, but within a month, I will be an owner, yes.
Oh, really? Okay, good. So you're buying the practice you're working in?
We're starting from scratch.
Okay. We're meaning you have a partner? Okay. Anything else I should know? This is all for your benefit, hopefully, that I can like tailor what I'm saying. Because I would have never guessed, for those who are doing tongue-tied stuff and whatever, like I would have never tailored it to you without knowing that. I'll do my best. So that's great to know. Okay. Oh, great. Great. How long is that? When's that process going to be done? Okay, so pretty soon. Yeah, great. And where is that going to be? Will you both be working there full time? Gotcha.
But for sure, we're either one full-time or 2 part-times.
Okay. So the goal, so you're both working right now as associates, building your own practice. The goal, I assume, one day is you're both in there full time working for your, yeah. Anything else I should know? Okay. Okay. Great. Okay. Good. And are you interested in owning your own practice someday, or where are you at?
Yes. 2 or 3 years out.
Yeah. Good. Good. That'll be good. Get some experience and speed and see how other people do it. You get an idea of different practices and okay, good. Well, let me give you a bit about my background. So I was living in Melbourne, Australia about, what was it now? I guess about 10 years ago. And I had a buddy who had just graduated from USC a year before that, and he had started a dental practice in small town Texas, and it had 7 treatment rooms, and he asked if I was interested in coming to help him grow the practice. Kind of be like an office manager, which office managers are great, but it wasn't like my trajectory from like PhD, I was teaching at a university, to then be a dental office manager. Nothing wrong with it. They're great. It just wasn't in my career path. But I was interested in opening multiple practices, and so we set out to do that. So I moved my family from Melbourne, Australia, which is a pretty cosmopolitan area. Before that, we lived in England, and so it was quite the move for me and my wife. And kind of crazy because I'm the one who flew out to Texas and said, yes, you know, with my wife, we're moving here, but she hadn't seen the place we were moving to. So it was great. Lots of experience, though, from that, because every day I worked in the dental practice. So early on, I pulled my desk up right behind all the front desk girls and learned everything they did, everything they should do, did a lot of reading on Dentaltown, and I had a lot of business knowledge because that's what I taught. And I had started other businesses before, but just not in the dental field. So wrapped my head around the front office, started working with hygienists, figured out what they do, worked with assistants, with docs. And so we had quite a few new grads right out of school that we brought in as associates, got them up to speed. So kind of learned what they needed, how they thought, and tried to get them, you know, up and running as soon as they could. And then those associates went on to buy practices and so on. And so we did that for about 5 years in all around Dallas and part of Oklahoma. And that was great because that allowed me to do the marketing. So we did web design, social media, designing mailers, radio, so all of that. Operationally, we put together systems manuals, training manuals, operating manuals, kind of ran it like a franchise in a good way. So we felt like we took the best of PDS and Heartland and some others and applied our own unique kind of private practice twist to it and ran those. So that was great. And on the accounting side, we were always lacking. We hired some pretty big name dental accountants and paid quite a bit of money. But what we were finding was we were getting our profit and loss statements and balance sheets about 2 months at best, 2 to 3 months after the month ended. So we get a little folder in the mail and it would say all of our, you know, categories, everything we did, a ton of line items, ledger items, which I'll show you in a minute, and just dollar amounts. So it wasn't really helpful, partly because it was so far after the fact. It was all hindsight, which is partly what accounting is. It's a snapshot in time of what you did. But I wanted it to be way more actionable than that. So I found myself taking what they gave me, plugging those numbers back into Excel, creating percentages, and just tweaking the numbers a lot to get something that actually mattered for me. So that's the way we approach it from working inside a dental practice. What are the accounting needs that we had? The other thing is until we got those statements from them, I couldn't do anything. I couldn't log in and see my numbers, see my P&L, because those accountants had it on their own desktop version of QuickBooks. It wasn't a QuickBooks Online like we use now. So those were some of the issues that we had. So eventually we just said, hey, we're going to bring this in-house and do accounting ourselves. And so we have Mason who works with us, who's a CPA, multiple CPAs, multiple bookkeepers, and we've grown from that side of it. And we continue to do the marketing and the operations as well. So it's great because we bring together all these services that some dentists are paying, you know, 5 different service providers for accounting and marketing and social media signs or whatever it is, and we just do it all and hopefully do it both cheaper and more effectively, we believe. So I've taken all the things that bothered me about accounting and we've put that into our product offering. So that's a bit of the background. I just wanted you to know where we're coming from. Okay, so you guys have given me some information here. Those are the questions I just asked you. So this is the P&L we used to get, the profit and loss statement. How many of you have looked at a P&L before? Okay. So what's the whole goal of the P&L? What do we want to know? Good. And how do we find that out? Okay. I know I'm keeping it very simple to start. So revenue minus what? Equals? Or? Very good. So P&L, right? Profit or loss. One of the questions we get a lot, which we'll answer here later, is I'm making a lot of money in terms of I'm very profitable. Where's the cash? Why don't I see my bank account increase? So Mason's going to address that later. You guys know how many small businesses in the U.S. go out of business? Every year. Yeah, definitely most.
95%.
It's something like that, and within 5 years, it's about 95%. What I didn't know is that about 90% of those are profitable when they go out of business. Kind of crazy, kind of counterintuitive. You'd think, well, I have a profitable business. What's going on? What do you think's going on? Yeah, cash, right? It's like blood or oxygen. If we don't have it, we're dying. So P&L, though, we want to know on a monthly basis, right? Are we making enough to cover our expenses? And we want to know, are we making money despite what we're doing or because of what we're doing? Meaning we could be making more money. Just because we're making money doesn't mean we're running a good business necessarily. We could be better. So this is what we used to get. And I know it's small and it's intentionally small. So I've got auto expense, bank service charges. I won't read them all, by the way. Business license and permits, computer and internet, continuing ed, contract labor, dental supplies. So I want you guys to tell me, if you've read profit and loss statements and you're thinking about being a business owner, what is it you would glean from this? What would you look at and say, here's something I can change in my practice, or here's where it's out of whack? So someone said overhead. So what's overhead? What else? Personnel, so payroll, lab, supplies, rent.
Utilities, maintenance when you're building.
Okay. And how do I know if I'm high or low on those?
Hopefully your accountant has some dental knowledge.
Right.
So
Good.
if they will guide you, you're either here or there. There
Good.
are magazines that you can find that stuff out in too.
Yeah.
I've got this handy brochure that tells me.
That's good. So for each of you, yeah, we've got that. And we've got all the numbers on a little cheat sheet up here, so make sure you get those. But I'm going to go through those. But this is what we used to get, which is not categorized properly, basically. It's too much. It's almost like pulling up our bank statement and seeing here's every expense. How does that help me?
The other thing too, from when you were just reading down the list, it seems to be an alphabetized list.
Right.
And there's a couple things that if I'm a buyer of a practice, I'm gonna put that back over into my pocket because like your auto expense, you might be leasing a car, you might be a CE junkie,
Yep.
and you're spending a ton of money
Yep.
building your skill set, which isn't a bad thing to do, but you may not be able to do that initially.
Yeah.
You got to concentrate on being able to take home some money so that you can pay your bills, your personal bills, pay your student loans, and also make sure the vet partner is happy.
Yeah. That's a huge part of it. Of any business that you buy, one of the basic ones is the owner paying himself or herself or not? Right? So if you were buying a dental practice and the dentist says, well, we're at 80% overhead, our expenses are 80%, meaning we're at a 20% net profit margin. Is that good or bad? Well, it kind of depends. Is the owner paying himself or not? Right? Meaning if you were to buy a business and it sounds like it's very profitable, but the owner's not paying himself, well, that could be a problem because you're going to have to go work in that business, right? And maybe that gets added in or taken out, as the case may be. So,
Chris, I'll
yeah,
jump in with just
Yeah.
one comment that we kind of started on there. As Dr. Wyman said, this is an alphabetical list, which is kind of just the default way of preparing a profit and loss from an accountant standpoint is here's all your expenses. As Chris mentioned, if I look at that and say, what should I change? Well, it's kind of hard. As Dr. Wyman said, it's scattered all over right now. It's an alphabetical list. If I want to look for various expenses, one might be over here and back over there and all over the place. The thought came up, or the comment, I could look at my bank statement and kind of see. We had a conversation with the dentist recently about that regarding cash flow, and the comment was regarding his cash flow. He said, well, so should I just go look at my bank statement and that will tell me? Well, yes, ultimately, every transaction is there, just as every transaction is here. If I were to drill down into any of those numbers, they're the sum of what we've considered all of your advertising transactions. But all that data is so hard to analyze. Even at this level, it's extremely hard to see, are these guys doing well? Could they be doing better? Where could they be doing better? Where are their problems? So
Yeah, that's great. And if we can do that, which I'll show you how we do that, we can be a little more strategic with our foresight. Instead of just looking in hindsight, you know, especially if it's 2 or 3 months ago, I want to know what's happening immediately. What are the pain points in the practice? So here's slightly better version. So we've taken the same P&L and we've grouped it in a better way. So we've got some major categories now. So you can see under expenses, we've got supplies, facility, and we've put some of those subcategories or whatever those items now under facility. Same with labor. We break out assistant hygienist office and so on. But we have now a total wages or total labor costs, total facility costs, like you were saying. So instead of 100 categories, we have 6 that we're going to focus on. And so what we do is we take those 6, supplies, facility costs, labor costs, lab fees, marketing, OG&A, and we not only have the dollar amount, you know, whenever we're reading a P&L, we want to make sure what snapshot are we looking at. So we've got January through March 2018 for this practice. And then the real magic happens with the percentages, because now I'm apples to apples. Now I can compare what are my supply costs compared to the industry standard, right? Yeah, please. Mason?
I've been having problems with names all day, and I just completely spaced it.
Yeah, so it's like office, general, and administrative expense, but elaborate.
No, you're fine. And if you want to go back a slide or forward a slide, do we have, go forward a slide, I think.
I think it's,
We cut off the bottom.
we'll just cut
Basically, OG&A is going to be all of your other costs that aren't in one of those other main categories. So it's going to encompass everything else. So if it's not supply, facility, labor, lab, marketing, it's going to go in there. So your office supplies at the office store.
merchant fees,
Yeah.
maybe.
Yeah, your bank fees might be in there. Auto mileage is going to be in there. Things like that. Just everything else is going to be in your OG&A.
Yep. So it's kind of a catch-all of everything that doesn't neatly fit into the other categories in a way. So with those 6 now, right, I can compare these numbers. So you guys probably know, what should supply costs be? Shine should tell you, right? We're in a Shine building. They should tell you every month, or your local supply rep, where you're at. 6%. Yeah, 6. They used to be 5, 6. It's pretty hard to keep supply costs in line nowadays, it seems, for whatever reason. And we're gonna drill down on that and why that is. So we're gonna go through the industry standards, because I want to see, is 18% for labor costs good or bad? Is it too high, too low? Okay. So here we've got my 46% total expenses, 54% net operating income, or net profit margin, however you want to think about it. Another way to think about it is for every dollar in sales or revenue or collections, whatever you want to call it, how much do we keep for every dollar? $0.54, right? So for every dollar we keep 54 cents. We spend 46. Okay? Now, crucially, this tells me officers' compensation is down here below. Because the industry standard, for whatever reason, perhaps because it used to just be you hang up a sign as a dentist and you do dentistry as a private practitioner and there aren't corporations and not a lot of associates, it's pretty much you should be at a 60% overhead or 60% expense, meaning for every dollar in sales, you're spending 60 cents on marketing, lab supply on average. So we take out officers' compensation. It gets a little more tricky when you have a practice. Let's say you own a second practice and you only have an associate there. Do you include the associate under labor costs or not? Well, the main thing is whether you do or not, that you calculate for that so that you know your labor costs are going to be higher if you have an associate in there. It's not going to be the 25% anymore.
I'll jump in real quick.
Yeah.
You mentioned an example earlier, and that's what helps. We're apples to apples on percentages, but if you're looking at another practice, for example, to purchase or compare yourself to, and there you threw out the 80% number before and asked, was that good or bad in overhead? You might be fine if your associate wages are included in that, but if they're not, then now we flip to not good. So it's good to know what's included if that's in there or not.
Yeah. This is crucial. So if you were going to buy this practice and work in it, you'd want to know what officer's compensation is, wouldn't you? Right? Because that's what the wage you would expect to make. Right? They could have put officer's compensation up here under total expenses, and that would also be relevant. You'd want to know which way they're doing that. So the question is 54% net operating income or net profit margin, is that good or bad? For one, it's really good. It's like a pediatric dentist almost with very low overhead or something, but this is a general dentist practice. It's really good. But how good? The beauty of this is, say I want to evaluate the purchase of any business, a Mexican restaurant, a grocery store, a dental practice. My portfolio consists of all kinds of businesses. This helps me evaluate apples to apples on a percentage basis. How much does each one bring in as a percentage of revenue? For my dental practice, 54 cents on the dollar, basically. Walmart, how much does Walmart make on the dollar? How much do you think they keep? What's their net operating income as a percentage of revenue? Yes. It's like 1 to 2%, right? So if you were, but this is the crucial lesson, right? If I own a bunch of businesses, dental practices will bring in more, right? In terms of I'll keep more for every dollar. So why would I ever choose Walmart? Well, because they do billions and billions in revenue, and that all starts to add up, right? What were you going to ask? Yeah. Yep. Correct. It's a very good question. Yeah, that's a great question, and a one where you can save on taxes. So why don't you address that one? How much should the owner pay himself or herself?
So that is as Chris said, it's a very good question. There are arguments all across the board on that. It's going to be case by case, really, as far as the dentists that we run into and where they want to be. That there's been some tax law change that just started in 2018 that's kind of changed that whole realm as well, because there's now a new 20% deduction for businesses for net income, but that wage is going to come out before then. And so in the past it was, we could look at one number and be good. Now as that officer compensation comes down, saving payroll tax, I might also be able to take a bigger deduction, and so there might even be more incentives to do some things there. So it's really just, we want to look at the business. I never, you don't want to take a wage if you're losing money or if you're close to it. The IRS doesn't require it, and all it does is require you to pay more tax. So as you start out, it might be you're not taking much wage, but as there's money there, the IRS comes back and says, we want you to pay yourself a reasonable wage compared to the market for what a dentist would be making. So, but again, there's a range there, and it's case-by-case situation that you look at that.
Yeah, unfortunately, a lot of business school and accounting answers, the good answer is it depends, but then we back it up. So it really does depend, and that's what you want us to say. It's not blanket advice, but that's also why we recommend every September that you have a strategy session with your accountant. So we do this all throughout the year. Hey, you're trending towards this. Let's analyze your tax situation, or let's look at your business situation, or make sure you're putting money away for this, or you could actually pay yourself less, or whatever it is. But that's especially in September, because you don't like finding that out around February or March or whenever, that you're going to owe money and you weren't aware of it.
And we like to do that in the fall just because that gives us enough time. We get the question in February, hey, how are things looking? Well, we're 2 months in, and who knows what the year is going to look like. But as you get to September, we might even reassess if things have been really great, or the other way around. let's come back and reassess in November as you get closer. One, so we can plan for the end of the year from a spending standpoint, tax standpoint, but also so that you know or have a better idea of what taxes might look like in April to be able to plan for that.
Good question. I think the other reason that question's relevant is, imagine you were going to buy this business but put an associate in there and not work in there. Maybe you wouldn't be paying that associate $17,000 or almost $18,000. Maybe that's just the owner's paying himself or herself that much. You could pay them, $12,000 or whatever it would be. But then you're gonna make less money, right? But that's okay potentially because it's your second practice or whatever it is. You're not working in there, but you'd have to add it back in. You wouldn't be keeping 54 cents on the dollar at that point. It would be less, right? It'd still be good though.
Make one other comment quick before I leave this slide. Just a comment that came up that we mentioned as far as, is that percentage good or bad? And I, popped out, it's really good, but the benefit of having this up here is overall that percentage is great. I think most dentists, if you put that out there and said, could we have that? Yeah, they jump on that. But I can look now at my supplies and say, as we talked, well, maybe I want supplies closer to 5 or 6%. I'm almost at 8 here. So even though it's great, and if I'm just looking at my bank account saying, well, I'm taking plenty of money, I might be able to, if I shave 1% off that, take another $3,500 a month, which is going to be close to $40,000 for the year, and an increase there. Even though if I were just to look at the overall number, you'd think, yeah, it's great. So this allows you to dig deeper and say, even though things are great, we can make a little tweak and work with the assistants on supplies, and for no additional cost, now I've just put another $40,000 at the bottom line over the year.
Yeah, so we've got some docs who don't get this number under control as much as we'd like. We start giving them on the operations side some budgeting tools and things like that. We want their lead assistant, for one, we want them to have a lead assistant who's in charge of ordering. We give her tips on how to order, how to maintain inventory control, visual controls, keep it lean, don't overstock. Anytime you got a ton of inventory, that's a lot of cash that you don't have, right, in the bank. So